So welcome everyone to our Going for Gold techniques to optimize cost and rapid delivery value in procurement. My name is Graham Crawshaw and delighted to be here today. A quick sort of admin note, we are recording this and this recording will be made available to everyone. And a copy of the slides will also be sent to everyone that is registered to this event. So that will be all made available to everyone. So before we get in, it's probably important to know who's doing the speaking, and delighted to be able to welcome both Chris and Nick to the webinar. Who wants to go first? Chris, you're unmuted. Would you like to introduce yourself?
Absolutely. Well, thank you, Graham, and welcome everyone. It's a pleasure to be here again. And as I mentioned in the chat, I'm down here in Florida right now, and I think we were talking about the weather. Graham was comparing some of the weather in the UK and Nick versus what we're experiencing down here in Longboat Key, which is just fabulous weather. But just in terms of myself, I lead our global sourcing, procurement advisory practice here at the Hackett Group, and have been around the firm for quite some time, and look forward to the session today.
Excellent. Thank you, Chris. Nick, your turn.
Yeah, hi folks, Nick Walden. So also from the Hackett Group, but I'm based here in the UK. So I work in our European branch as part of Chris's team. So again, my pleasure to be here. Really looking forward to the session. So back to you, Graham.
Excellent, great, thanks. And I'm the procurement content director at CASME, which means I look after all that we do from a procurement perspective. So we're delighted to be here today. The CASME Hackett Group Alliance has been in place now for a good number of years, and anyone not familiar either with CASME or with the Hackett Group, then I guess you should check us out in a bit more detail. But the specific agreement, the alliance that we've got between the two companies, is designed to help each other's members. So we've got some very specific documents that we share, very specific webinars that we do for each other. And it's just great to get that different perspective, because at CASME we're focused really on the category managers, and Hackett tends to be more senior. I think that's a fair assessment, Chris. But it just means that collectively we've got those insights. So between us, we know pretty much well what is going on in the world of procurement. So it's great to be able to get together, talk, and share some of those ideas. So let's get on to some of the content. And yeah, I'm going to hand over to you, Nick.
Thanks, Graham. So for the benefit of any Hackett clients on the session or CASME clients, for a number of years now, I'm going to say 3 years, 3.5 years even, right? With all the pandemic lockdowns, first up for many of our clients, the challenges was around responding to scarcity conditions and all the business disruption that was going on. But certainly for at least the last 2 years, it's been much more about understanding the margin and the inflationary pressures. So for at least the last 2 years now, on a monthly basis, here at Hackett, we've been producing our Managing for Inflation monthly inflation report, and that's available to all of our Hackett procurement advisory clients, and we share that with CASME as well. Now, what we've got up here on the screen is a lift out of one of the overview slides. So I thought before I bring in Graham and Chris, it might be useful just to set some of the scene, right? Just to talk through some of the high level macro trends that we're seeing in the markets right now. I'm based here in the UK, so these are my observations, my perspectives, right? If you're there in Canada, I saw someone from Canada, Brazil, maybe other parts of the world, right? Then you may be experiencing different conditions. But if I just run through some of these headlines, talk about something, just share some of the perspectives that we've been seeing in terms of how we've been working with our clients, running different polls and so on over recent months. So I guess if I start up there, just the view on regional economies, right? It is a mixed market, or a mixed market of different business conditions. So depending where in the world you are, you may be seeing a bit more of boom or a bit more of bust, right? So if I pick one out like India, India really seems to be one of the standout economies right now, really experiencing very strong growth conditions, both on the manufacturing and the services side. You only need to look at their PMI numbers to see just how strong it is there. And if I compare that to China, China's economy is a bit weaker, right? They're looking at stimulating a bit more, certainly weaker on the manufacturing side, and things have been a bit softer there for the last year or so. If I then move on to the US or North America, many of the Western economies have been much more resilient, much stronger than people expected. So many people really expected that there would be a stronger slowdown, or we may even be in recessionary conditions already by now. Look, the negative growth or the slowing growth trend is absolutely there for many parts of the world, but the US, North America is definitely standing up. Right, they've fared pretty well in terms of inflationary conditions. If you look at the CPI or the PPI index, it's been solidly down from about this time last year. Right, we then move on to Europe. Europe is where the softness really starts to come in. Right, not faring as well as the US, definitely resilient. But some news that we've seen in the last couple of weeks is that there's now 5 European countries in technical recessionary conditions, along with the whole of the European Union, Germany, Ireland, and New Zealand, right? So like North America, inflation has been sticky, but much more sticky here in Europe and the UK, right? Driven by energy and the crisis that we had there last year, food inflation, but especially on the services side, right? The services side of the economy, if manufacturing is soft, services is holding up really well, tight labor markets, and that's driving wage inflation there. And you see some of the numbers in terms of the latest CPI conditions. Latin America, I'm less familiar with, I have to say. I saw someone was there from Brazil, but as I understand it, many of the usual inflationary trends continue, the US dollar, the dollarization and whatnot. Some countries like Argentina especially, inflation is really running really quite strong, right? And interest rates, central bank funding rates have been raised to near 100%. But if we then move on to what we're seeing in terms of different business sectors, right? Not everyone is having a hard time. So some industry sectors are doing really well. So anything to do with services is still strong. Given what's happening in Russia, Ukraine, and certain other parts of the world, if you're in an industry that supports defense or militarization, things will be going very strongly for you as well. Also in pharma and healthcare. And then anything to do with energy or energy in the green transition, then most of our clients there only talk to us about growth and how procurement can support those growth strategies, SRM, strategic supplier, tactics, capacity planning, and so on and so on. Where it's not going so well, right? So for at least a year now, North America, especially in the high tech and the financial services sectors, we've seen a number of restructuring plans, we've seen a number of redundancies, and definitely the job losses there have been significant. I saw a recent statistic that said job losses in that part of the world have exceeded the number of job losses from the tech bubble burst way back in 2001, I think, right? So it has been significant, and it has recently been extending out from that. So from the US specifically, we saw a recent uptick in the unemployment number from about 3.4% 2 months ago to 3.7%. So the market may have turned there. Definitely seems to be broadening out, and things slowing down. If you're a manufacturer, I mentioned already, anything to do with electronics, retail even. Now, there's some things in the middle, right? Anything to do with public sector, anything to do with consumer staple goods, automotive seems to be doing okay. And then a slightly different perspective is, so I mentioned the challenges around services, right? Tight labor markets. So if you're buying services, sourcing services, then inflation there is still strong generally. Prices, wage rates up generally. But if you're on the direct side, right, you're buying anything to do with commodities, raw resources, materials, parts, components, goods, et cetera, logistics, then very different trends, right? For more than a year now, probably March, April 2022 onwards, right, we've seen a pretty significant downtrend. Okay, there was a bit of a bump when China reopened with the zero COVID lockdowns in Q4 last year, but pretty much a downtrend there in terms of commodities, resources, right? To quote one of the numbers there on the screen, if you look at the Baltic Dry Index or you look at the Drury Index, then potentially we're even below 2018, 2019 levels from a shipping perspective. And so this means certain things, right? A complex and a volatile world, and we need to be quick. So maybe I can bring in my colleagues here. Chris, would you like to go first? Right, you're based there in the US. What are you seeing from your clients?
It's interesting, and I think there was news this morning, and so it's interesting. A couple of positive bits of news. One is our banks within the US have passed the stress test. Certainly a challenge that was sort of very much of a focus earlier on in the year. I think the second thing is we saw a revised GDP for the first quarter forecast from 1.3% growth to 2%. So you're seeing some very positive indications of a more healthy and resilient economy. But that doesn't mean there are regional differences. That doesn't mean there's not industry differences, et cetera. I think one of the things that we're going to go into more of is really the impact. I mean, we're talking about a lot of trends right now because of what we went through over the last several years, the pandemic, the shutdown of the world, and all of the disruptions that we've experienced, especially in supply chain over that period of time. And I think, like anything, and understanding that we're dealing with these impacts today, the question is how are we rebuilding and redesigning things on a go-forward basis? And so I think a lot of these things that Nick is talking about, these trends that are occurring, are certainly forcing us to rethink how we do things. One of the big hype areas today that a lot of folks are talking about is generative AI and the impact of intelligent automation on our organizations on a go-forward basis. So there's a lot of, not only market trends, but other trends that are happening within the, the broader environment. There will have, more significant impacts on us as we think about supply management, looking forward.
That's great, Chris. Super. What about you, Graham? Graham, you're based here in the UK along with me. One of the trends we've talked about in the past is, are we seeing an increased focus from clients, from sourcing managers in terms of cost reduction? Are you seeing anything like that here yet?
I certainly am. A tremendous focus on cost reduction. And actually, I'm going to save some of that because we've got some data to demonstrate that. So I'm going to keep everyone in suspense because I think there's some really key messages to share on that. I think now we want to get this as interactive as possible. So anyone with any questions, please use the Q&A box. Hopefully, Rose is also going to launch a poll. And I guess in the light of everything that you've been hearing at a macro level, we want to understand back down to what are your concerns. So we've got over 80 people on the call at this precise moment. What are your top concerns for your organization at the present? And you can answer more than one concern. And so from the list, I'll just quickly read it out whilst you're taking time to complete. Environmental, social governance, risk, margin, inflation, costs, business resilience, supply continuity, geopolitics, labor, identifying new sources of value, including supplier innovation. Pick those that are most important. You could tick all of them, but that's almost a bit pointless, to be perfectly honest. So just pick those that are most critical to your organization, those concerns that are keeping you awake at night, or how the phrase goes there. What's important to you? I see we've got 60%. Anyone else like to contribute? That always boosts the numbers up, and then we'll share the results. And I think that's going to give us an indication of what the priorities are, because we've got a great representation on the call today of what procurement is really facing. So let's call it a stop there. Let's share the results. No surprise, and please, because you've been able to respond to more than one. Look at the length of the bar rather than the percentages, because it gets very complicated. Costs right out there, followed by inflation. You know what, I think all three of us could have said that's what it was, but it's great to actually have the data to confirm it. So this is what you're all collectively saying at the moment. So cost first, then inflation, and then identifying sources of value. And then we seem to drop. We've got all the others that I guess are concerns, but just not the top concerns that you face at the moment. So
Yeah,
thank you.
One of the things that's interesting to me on this, and it really confirms what we've been seeing. You know, when we came in this year, many folks are familiar with the key issue study that we do on an annual basis. And, you know, we ask organizations similar to this question right here is, what are the priorities that you are focusing on as you look into the next year? Well, coming into 2023, the focus was on the continuity of supply. And number two, it was focused on inflation. And, you know, cost was number three. But as we progressed, and, you know, certainly all of the conversations, and we have not rerun the study, but based on the discussions that I personally and many of my team are having with organizations, you know, I'm not surprised cost, and we're going to talk more about it, you know, because it's not just about cost and the impact. And, you know, it's surprising to me that margin is only 17%, because to me, the cost and the margin are very related. You know, if I can drive down the cost, then it's going to improve my margins, as we're trying to maintain, you know, margin in an environment where it's a little bit more difficult in many cases to drive top line growth. So, you know, these two are very, you know, linked, but it's also the velocity by which organizations are needing to drive the focus on cost. It's not just, you know, go out and drive some costs, but how fast can you go do that? Because we need to have near-term impact within 2023 on our financials.
Excellent, thank you. So let me share with you some results from very recent, in fact, last June. It's June still, isn't it? Very end of June, but we are still in June. Which top three strategies has procurement been applying? So we understand everyone is facing issues around inflation, but actually, what are you doing about it? That's what you want to know. You want to know what hundreds of category managers are saying. This is what they're actually doing. And so here are the results. I'm not going to call them all. We're sharing the slides with you. But you can see there is lots of activity, the opportunity to renegotiate contracts as they expire. And of course, that can be a difficult one. If you've had fixed prices for the last 2 years, there's going to be pressure on you from your suppliers to increase costs. So lots of different activities there. And specifically, what techniques are you doing to actually mitigate and address inflation during negotiations? So procurement is looking at all sorts of different ways to really help understand and manage inflation. I think that comes across loud and clear. There's lots of things that you can do, whether it is benchmarking, whether it is promising volume. Something I hear a lot within the APAC region, it's that future promise of volume that really does support the ability to negotiate prices at the moment. Nick, over to you.
Can I make one comment before?
Sure.
You know, one of the things on that previous slide is it's interesting because, you know, as we went back over the last several years, you know, I think two things that were really an opportunity for a lot of supply chain organizations. And, you know, I like to say is that it stress tested some of our capabilities and skills as an organization. You know, as you know, some of the more traditional things that we do to create value, you know, through leveraging techniques like competition, et cetera, global sourcing, weren't necessarily as effective. And so, you know, it's sort of focusing and sort of shifted our focus on things like, you know, and you highlighted some of this here, is on the, you know, cost modeling and really understand the makeup of the costs. And as we're being, you know, proposed increases, are they reasonable or not? But I think one of the things that was very interesting that really provided us an opportunity in supply management is to really drive to some of the specification changes that are needed and had been needed for a long time in many of our products. areas that the approval cycles are quite significant. Maybe there's regulatory, challenges to make these types of changes in your product because of you're in the pharma industry or another heavily regulated industry. But now that you have this inflationary pressure, it made more sense. It gave you the necessary justification to be able to explore some of these things we haven't been able to explore for quite some time. And so, and I think the only other thing I would highlight, it also forced us to really look deeper in our supply chains. As you think about inflation, certainly we understand inflation coming from our tier 1 suppliers, those that we do business with directly. But a lot of times the source of that inflationary challenges are further deeper and in further tiers of the supply chain itself. So it forced us not only to look for risk, which inflation is a risk to our business, but to look and gain better visibility, a challenge, and we're still all working on it, to look for those sources of challenges, much deeper within our supply networks themselves.
Thank you.
Yeah, thanks, Graham. Thanks, Chris. So as part of this session, we wanted to bring some techniques to you in terms of how do you work to optimize costs, right? As you saw from the previous slide, whether it was negotiating or benchmarking or using price adjustment indexes and other mechanisms like that. Here at Hackett, with our clients, definitely everyone has been seeing similar in terms of the margin inflation pressures, right? Everyone's familiar with the situation. Supplier comes to you and says, hey, Nick, price needs to go up 50% because, right? So what we've, to build on the slide earlier, what we've been coaching and guiding our clients is this 3-step data-driven approach to use, right? To use data, to use insights, to really push back on suppliers. And as Chris was saying, even to collaboratively work with them to help them better manage their own costs, right? So some clients that we work with say to their own suppliers, hey, you need to fix your utilities costs. If you don't, then you wear that risk yourself, right? So this 3-step framework really starts in the top right there around understanding at a deep level, what are the major factors that are driving business conditions, the macro economy out there right now. Yes, it's absolutely inflation, but you may also be suffering in terms of some scarcity conditions. Maybe also there's some geopolitics at play. I saw on the previous poll that geopolitics wasn't necessarily scoring very high, but you may be sourcing from a part of the world where or not it is anything to do with Ukraine or Russia. Don't necessarily want to pick on China or Taiwan, but I will mention them, maybe in the Middle East or whatnot. But geopolitics comes into play here. But really the first step is to understand what's going on. But bear in mind, most of us within procurement, right, we never studied economics at university or whatnot. We don't necessarily understand everything that's going on, and we're also focused on getting the job done. The second step that we encourage is then, okay, based on everything that's going on, based on the suppliers that you work with, the contracts that you have, the parts of the business that you support, what is most relevant to you, right? What's really going to move the dial here? So again, I think someone earlier on said, don't focus on the tail, focus on your big rocks or your big nuggets, right? That's key to managing the inflationary pressures. Focus on the big line items, the big areas of spend. But in second place, in terms of understanding what is going to be the biggest hit for us, it's about the cost models, the cost structure information, right? So what I'm sourcing, what I'm buying, is it more driven by utilities, by labor, by consumables, by resources or whatnot? So whether or not we're leveraging that already from existing cost models, from market intelligence sources, or we're asking suppliers for that information ourselves, that's really quite key in terms of understanding, is that supplier's request for a 50% price increase going to be realistic or not, right? So once you understand what are the key drivers of cost and how costs are moving, right? That gives you much more insight, being able to push back and challenge suppliers in a productive and effective way. Now, if anybody's been reading other economic analyst reports out there from any of the central banks or any of the investment banks, you may have seen the throwaway line that the level of uncertainty out there in economies today is unprecedented. I was listening to a podcast yesterday And they were saying that, the last 3 years really have been some of the most exciting in history, right? So we've certainly been very, very busy in procurement and supply chain, but this means certain things like scenario planning. And I have a follow-on slide when I'll go into this in more detail, right? But I do encourage you, rather than making a prediction or trying to forecast the future, doing something like scenario planning, volatility planning can help us manage through these conditions as well. Now, based on the previous 2 steps, the analysis, right, what's going on, what seems to be the areas of biggest impact, that will draw us to some conclusions, some insights, which then we take forward in the 3rd step in terms of our preferred actions, right? Do we roll over our existing contracts? Do we avoid going to market, right? Or do we collaborate with suppliers and ask them, to reduce their price, or do we negotiate on additional non-price items, whatever it might be. But that last point is a key one as well, right? If we do have to give on price and the cost and margin pressures in the marketplace are considerable, then don't forget to negotiate and trade for other items, right? Capacity, limits, service limits, rebates, service credits, support for risk projects, ESG projects, whatever it might be. And there's some other things that we can do as well in terms of investing into additional monitoring or insight capabilities, right? Do we have an inflation dashboard? Are we building SRM skills? And so on and so on. So that's really the first technique that I wanted to introduce, right? 3-step data-driven framework to push back on suppliers and get to the bottom of what is a realistic price.
Thank you, Nick. Well, the technique I wanted to share was really just to bring you up to date with what I'm hearing, having had so many conversations with procurement professionals. And it's really interesting because you've got a lot of companies taking advantage of the situation. A lot of companies actively pushing up prices. I think we've all seen that in our personal lives as well as in a working life. And of course, you've got the situation that both suppliers or people working for suppliers, as people in sales and procurement, really none of us have got recent experience of negotiating in a high inflationary market. I have seen, and I'm interested to get the views of Nick and Chris, in the last 12 weeks, I've seen a significant change. If you look at 2022, procurement was really validating and making sure continuity of supply was in place, and your Hackett study confirms that. What I've seen in the last 12 weeks is procurement becoming much more aggressive, not accepting increases, not accepting the word inflation as justification for prices going up. So pushing back, wanting that level of transparency, wanting the detail, getting the supplier to justify precisely why a cost should change with data and information. And I think it's then down to procurement to make sure that we've got enough information, enough knowledge to be able to question. We don't need to know all the details, but specifically for indirect procurement, having enough knowledge to really question, get the supplier to justify, be transparent with the data, the numbers, the breakdown of the prices. That is what I'm seeing. So procurement's becoming much more aggressive, but also doing this under the sort of the whole umbrella of supply relationship management. We've evidence that shows those organizations that have active SRM programs in place, where there is trust, where there's a willingness to generally work together to much greater depth, then actually you can get through this whole inflation and really any other crisis much more effectively. But for many suppliers, it's a question of putting the pressure on them and becoming much more aggressive than we have been over the last sort of few years. Chris, Nick, any observations? I'm just reporting it as I've heard from so many of the CASME members, but that seems to be the behavior we're seeing.
No, I would certainly echo what you're saying, but the one thing I would say is that we actually started seeing the emergence of the focus on cost as early as August of last year. Now it wasn't broad-based, and I would say as we got into October and even in November, we started seeing a broadening of that. To your point, that in the last 12 months, it's really become the dominant focus of, I would say, the majority of organizations that, we work with, is the focus on cost. And it's not just the focus on it, it's the, as I was mentioning earlier, it's the speed, the velocity by which they need to go after it. I'll give you an example. I had one organization I was invited to participate in their executive, a very large technology company. And so on that call, the chief procurement officer and the leadership team of his leadership team was on there. But also invited to that discussion was the COO of the company. And what was interesting, and to me, that it gives you a sense for the level of aggressiveness that we're seeing in different organizations. And the COO was on that call highlighting to the supply management, these procurement professionals, this leadership team of supply management for the company, that if you're going out to those suppliers and they're not willing to work with us on taking costs down, you let me know and I'm going to call them personally. So this is the level of involvement and the aggressiveness that I'm seeing across many organizations, and I'm going to highlight an example in a few slides in terms of in some of the experiences I've seen as well.
Excellent, good, thank you, Chris. So yeah, we've got to get much more aggressive. Any doubt in that? Then yes, get aggressive. Let's run another poll. Thank you, Rose. Put that one live. So, which factors continue to impact inflation for your organization? Once again, you can answer as many as you like, but please try and focus those that really do make a significant impact rather than ticking them all. So we've got here shortage of labor, increased production costs, impact of fuel prices on logistics, the impact of energy prices on utilities, shortage of components, volatility in commodity prices, and we've certainly seen that, consumer demand impacts, or impacts of government legislation. Those are the top lists that we've certainly identified from our members as to likely to be impacting inflation. So let's understand the priorities and the sequence there from the 80 people that we've got on the call today. Just give you a few more chances to respond, and I think in the interest of time we can say let's share those results, please. Shortage of labor, straight in at number one. Look at the length of the bar rather than the percentage, followed by increased production costs. So once again, no real surprise. We talk about shortage of labor so much, but it's nice to get the data from you all today in the end of June 2023 to confirm this is a serious issue. We've already identified, you're all over the US and Europe. So that's a real good sort of confirmation that this is still a very valid problem.
Yeah,
any comments, Chris?
Interesting here is that, even thinking about the impact, because, you can look at impact in two different ways. An impact where it increases and has, I'll say an effect of increasing inflation. Then you have other areas like this that are having the other effect, whereas it's helping to decrease inflation. And I think there's a number of areas that are happening right now as you look at these areas that in many cases, they have been the real fuel for increasing inflation over the last couple of years, have now sort of reversed in some ways in many areas, because I could argue that a lot of these, at least in the US, are trending in a direction where it would have an impact on bringing inflation down.
Hence the comment about suppliers taking advantage of the situation. And
Exactly.
Unless you're on top of it, unless you've got the knowledge, it's going to be a challenge for you.
Yeah.
Moving on, let's look at the impact. I think you probably know CASME focuses on category management, and therefore we're very keen to get data category by category. So what are the categories most affected by procurement, by inflation? No surprise there. Those of you who look after energy, logistics, and even professional services, that's a reflection of the labor side. So I think there are some categories where the pressure is less, and obviously some more. Great to have the data to confirm that. And again, earlier this month, we asked across our membership, when is this going to end? When do you expect inflation to stabilize and decrease? And I think looking at it now, compared to when we first looked at it over a year ago, it's clearly not ending anytime soon. But I think we recognize it's probably not going to go on for years, but nevertheless, it's still going to be a challenge, depending where you are in the world, for some time yet. So something to take into to account, especially if you're negotiating sort of multi-year sort of contracts. Let's move on.
That's a perfect segue into this slide here, right? I mean, from a Hackett perspective, we've been seeing exactly the same, asking similar polling questions to our clients for the last 2 years. And every time we rerun those polls, everyone seems to shift to the right-hand side in terms of when end, right? But also, if you think what was on the last chart, there was a number of different bars there. So people weren't clear on when the inflationary conditions or the economic crisis or slowdown or whatnot would end. Is there even a recession coming? But this is the slide that I talked about earlier. A second technique that we coach and guide our clients on is about managing some of the volatility or managing some of the uncertainty. And again, look, if you're just running a tender and you're just going to compare and evaluate alternative supplier prices, costs, bids, whatnot, then maybe this is less relevant for you. But if you're a category manager and you're looking to prepare a longer term strategy, or you have stakeholders asking you, hey, Nick, what's the price of X going to be a couple of years from now? Then something like this scenario planning or volatility planning will be of much more use, right? You see some of the charts or some of the lines, the squiggly lines, reflects the points that Chris was talking about. We've seen a softening in many of the inflationary curves, CPI, PPI, but really what we encourage our clients is to move away from being able to predict the future, right? There's that phrase, nobody's got a crystal ball. If I had a crystal ball and could predict the future, I'd be very, very rich, right? No one's in that position. If you are, let me know. But what we encourage is to think about some likely potential outcomes. It can be as simple as prices up, prices down, right? Inflation up, inflation down. Or it could be significant geopolitical instability or whatever it might be. Some likely business or commercial scenarios. So that's the step one. Second step is, okay, how would they come about? Third step, what would that mean for us? Fourth step is remembering to track which scenario we seem to be moving more towards or seems to be more likely, right? So where we are right now, right? If you were to follow some of those curves on the left-hand side, the CPI, the PPI, the fall in the PPI inflation rate seems to be accelerating, right? If that trend was to continue, then we may move into some deflationary conditions, right? So not only price increases slowing, but actually prices falling. So from an economic or a business outlook, that's actually the worst case scenario, right? So if we know prices will be cheaper in the future, why would I buy it today, right? If everybody else starts thinking the same, then and spend and projects get deferred for 6 months or 12 months because we know it will be cheaper, then it becomes a bullwhip effect, right? And GDP growth slows and slowdown accelerates and we end up in a recession, which is kind of what we want to avoid. But I just wanted to share this information with you. The idea of scenario planning, volatility planning, as someone else that I work with refers to it. And getting away from the situation where we're trying to predict the future, right? I learned that very early in my career that you're always going to be wrong, right? Like I said, it's really been an exciting 3.5 years, very difficult 3.5 years, but who would have thought, you know, half the things that we've experienced and been through would have occurred.
Excellent, thank you.
So I wanted to, spend maybe just a few minutes on just talking about, and maybe just building on what Nick highlighted, and what you'll see here is a slide that is very similar to what Nick showed. Now, the challenge here, and the challenge I mentioned earlier, is that there's a lot of focus on cost today, and we've talked about that shift that has occurred, and I would say it's been a pretty seismic shift in terms of the priority in organizations. Graham highlighted over the last 12 weeks the massive shift that he has seen in terms of the focus on cost today. and, really relating to the margins of our business and protecting those in a very, more difficult economic situation. But one of the other things that we have seen from a number of organizations, it's not just about cost, but it's about the speed by which we can take it out. And so, we've had organizations that have, the senior leaders of those organizations put a lot of pressure on the supply management organization, highlighting that the impact has to be felt in 2023. And so the longer that we, take to actually, work through, some of the techniques that we do to take cost out, the less of an impact it's going to have on our financials in our current fiscal year, and if you're on a calendar year in 2023. So, some of the organizations that I've, worked with have been faced with that type of challenge. And so the idea was that how do we work with them to help to, really speed up the cost takeout? And so as Nick went through this, the steps all remain the same. It's just you have much more limited time to actually execute them. And so when you think about collecting insights, you're more limited to the types of insights that you can collect because of the time frame that you're dealing with. And in many times, the deal is that the time frame is 30 days, 1 month. And so, I've seen organizations where the senior leaders of the organization said, listen, we need to have this done, and we need to have these agreements restructured in 30 days, signed. And so that's a very limited amount of time. And so the idea is, how can we do that? We're going to go out. We don't have time to introduce competition in this. We're going to have to work specifically with the suppliers that we have today. And so we're going to have to collect some insights, but that collecting the insights is going to be more relegated to understanding the contract that we have in place with that particular incumbent supplier today. What's in there? What kind of requirements do we have? What is the expiration date, et cetera? And then from that, develop a strategy to go to that particular supplier. And on the next slide, I'm going to share a little bit more about that, but then we want to execute. So if we go to the next slide, what I want to do is, show you a very specific scenario that I've worked with several various clients. Number one is that just to understand the scenario, and as I highlighted in the previous slide, the scenario is that organizations have to take costs out, and again, potentially within a month, and it has to be done in a not only a rapid standpoint, but it has to be immediate impact on the organization. Now, with that, what are the challenges? And so the challenges that most of these organizations are facing as they went out to their incumbent suppliers is that they have existing agreements today. We have an agreement today. We're asking them for something that, that we'd like to benefit now, so it has an impact on our financials in 2023, like immediately. But the contract that we have in place with a supplier goes out to the end of 2025, the end of 2026. And so the question becomes is what's the incentive for that supplier to help us now versus, just waiting until the contract expires and, hopefully be able to renew it at that particular time. The other challenge is that in some cases, and we've talked about the lessening in some of the constraints in the supply, but in some cases, there are still constraints. So how are we going to go out to a supplier that there is a constrained supply, and in that, ask for cost reductions where they have, there's more demand than there is supply in that particular marketplace. So let me just take you through the approach that we went through. And again, this is really focusing on, rapidity in terms of how can we do this in a very rapid fashion. The first thing, as I mentioned, is that we focused on suppliers and not categories of spend. We were not necessarily looking at the overall broad category in terms of what's going on, because if we're looking at more broadly, we're going to start to look at opportunities to re-architect the supply base itself. And we didn't have time to go do that. So we focused on who are the suppliers today. We're not going to make changes to that, but how can we take out cost because we have to do it within 30 days. The second thing is, obviously, if you want to take cost out, you're going to have to, spend your time where the spend is. We're not going to go after a supplier that's, we're only spending $1,000 a year with. We're going to go focus on where the most of our spend is. But the first thing that we wanted to do in terms of preparation for this is what I call the WIFM. What's in it for me as the supplier? What can we offer that supplier as an incentive to help us out as the buyer now versus waiting to the expiration of that overall agreement itself? And so some of the thoughts that were coming up was, we could offer them an extension to the current agreement. Even if it expires in 2025, we could, extend that out to 2027, for example. What would that mean? And do we believe if we were to do that today, not necessarily go through a process of renewing or competition at the end of 2025, what would that mean to that supplier? How much value would it have for them? And what might they be willing to offer us if we were to actually extend that out? Certainly the threat of competition at a later date becomes, an opportunity to highlight that with the suppliers. Looking for more volume, so some of the organizations say, well, is there a way that we can shift, some of our supply? We have 2 suppliers today. We want to drive some, additional costs. And in some of these cases, they didn't have volume guarantees. So they're able to shift some of that volume to one of the particular suppliers to drive some near-term opportunities for cost reduction from one of the particular suppliers. I think the other thing, and depending on the industry that you're in, is the stability of demand. If you're in an industry, we know that this demand that we're experiencing today and what's been happening is going to change. We're going to start seeing more and more shifts, and we're already seeing it today, from a buyer or from a supplier, side market to one that's more of a buy side marketplace. And as a result of that, that can make things change quite rapidly. But I think the stability of demand, there's some industries out there, you take utilities, for example, that depending on what demand has, they typically have very stable demand on a go-forward basis. And sometimes it's slowly increasing as well. Well, that's very attractive to organizations where that demand in the future may be a little bit more uncertain than where it is today. One of the more unique things I saw organizations sort of offering as an incentive to drive, rapid cost reductions from the suppliers is using their brand. So, for example, if you're in a company that has a big brand, globally, allowing those organizations to use your brand, use it on their website. What is that worth to them? And in many cases, it's worth a lot for them to be able to highlight they're doing business with you, especially if it's a large brand, in terms of driving additional business from other potential customers for them. So these are some of the things that these organizations did to offer that. But right behind that is also saying, from a business standpoint, are there things that we can go do that allows us to, rapidly make these decisions? And I would say that the biggest eye-opening experience was that we needed to empower these procurement organizations. We did not have the opportunity to go for approval to say, we're going to go offer the supplier this, that, and whatever. And we got to go through an approval process that takes 3 weeks. Well, we're using up and eating up all of the time that we said that we needed to go do this. So what was key is that we had to empower the procurement professionals in a much wider way to be able to go make these decisions within the organization. And then the last thing is that we knew we were going to get some supplier objections. Things, for example, the suppliers might come back and say, listen, you've already, asked us for a increase, or a decrease, a year ago, and now you're coming back to us again. And so the idea was to catalog what we believe those supplier objections were going to be. And then we would have an executive communication that would go out. And for the known objections that we were going to get from those suppliers, address them. Allow the executives of that company to address those objections, rather than waiting for those objections to come up when they started the negotiation process with each of the individual category managers.
Excellent. There's plenty for everyone to think about on that one. It definitely is a great different perspective, just to make sure that you think you've got to get this done quickly. So thank you, Chris. Let's have our third and final poll of this this session. Thank you, Rose. Which value optimization techniques have you found most effective? Please select all that apply. So we have got pushing back on the supplier, using data insights, asking incumbent suppliers for rapid reductions and pain sharing, like Chris has just described, identifying cheaper alternative sources and solutions, often easier said than done. Strategic sourcing, bundling and synergies, using price index adjustment mechanisms within the contracts, changing specifications, demand management initiatives, or collaborative solutions with suppliers. So again, we've taken those top that we're hearing from our collective members and sort of putting it back to you to try and get an understanding of where the priorities look like. So just giving you a few more seconds to complete that. Notice the emphasis on the top one, pushing back on suppliers with that data insight. That's so important to have that, to give you that credibility to challenge and really question when the supplier potentially is taking advantage of the situation. Thank you, Rose. Let's share the results now. And no surprise that what we've just been talking about, that pushing back, using data insights, is definitely the longest bar there. Also with collaboration, that's coming in at number 2. So it just shows what we're talking about in terms of the value of SRM. Definitely worth getting you collectively. You're not supposed to be doing this so that it's aggressive to the supplier. It's designed to be collaborative and see what you could really do to help manage and take out costs. Any observations on that, Nick or Chris?
I mean, from my perspective, I'm greatly encouraged at the first part. How long that is. That's absolutely what I've been talking about for more than a year now, right? And many of these suppliers, as Chris was saying, we've been working with for many years, right? And that they are under significant pressures. And at the end of the day, we likely want to work with them in the future, right? So it's not necessarily as easy as just chucking them away and finding a cheaper one, but also if we push back on them and saying, look, is this really, are you not just taking advantage of? Doing that in an effective and constructive way can be quite a skill. And one of the easiest ways to do that is to use the data to justify or get them to justify why. I'm really encouraged by the bottom bar as well, collaborative, right?
Yeah, I absolutely agree with Nick. I mean, it is about the data going forward, and we're in an environment where more and more data is available to us. The challenge is how we're going to take all of that and create the kind of insights that we need to, in one case is to have these conversations with suppliers. And certainly I think, the last several years has certainly forced us and stress tested our capabilities and probably exposed some vulnerabilities that we do have. And as a result of that, and the nice thing that we're seeing here is people are starting to address that.
Excellent. Well, in our last 3 minutes, here's the way forward. So, Chris, I think you're going to start with that one.
Yeah. I'll probably build on the comment that I just, made a comment. And I think as we look forward, you always have to reflect on the last few years. And the comment that I made is that I believe that the environment that we've been exposed to, especially since 2020, the start of the pandemic, the shutdown of the world, and as a result of that, the constraints in supply and the impact on, inflation and the inflationary environment that had created, and created a lot of challenges for us in supply. And as I mentioned, it was a great stress test for supply management and supply chains all over the world. Not only in terms of, how do we deal with an inflationary environment and dusting off some of the skills that we needed to have in terms of should costing and all those types of skills and, being able to justify and understand, are the increases that are being proposed to us by our suppliers justified or not, and having an intelligent conversation with them with data that we have. So these things were all exposed. I think from a risk standpoint, we realized that there was a lot of vulnerabilities within our supply chains as well. Certainly, as our supply chains were being stressed in a normal, I'll say level of thresholds, everything was working well and we were living. And it wasn't until we got stressed beyond the capabilities of what we had architected that we found these vulnerabilities. And so many ways you can always look at these environments as being a glass half full or glass half empty. And I think in one way you can look at it as a glass half full, because it gave us an opportunity to see these vulnerabilities and be, as a result of that, to fix them. And so as we look forward, I think not only, what the experiences that we have and the ensuing environment that it created, there's a lot of things that are changing. One of the things that, Nick has been talking about is this whole idea of an insight-driven, and I like to use the term, intelligent procurement organization. I think we're really shifting. We have been talking about it for a long time. How do we shift from a more of a process-centric type of organization to one that's much more based on intelligence and the insights that we have? There's a massive amount of data that's continuing to be collected, not only within the technology systems that we have as organizations, but externally as well. Data that's structured and unstructured, et cetera. And how do we use this to provide the scenario, plans that Nick has highlighted, as well as other types of recommendations to the organizations? The skills that are necessary. Again, when we talk about stress testing our capabilities, it wasn't just about the processes, et cetera. It was about the talent and the skills that we had. And that sort of identified skills that we need on a go-forward basis, and certainly exposed the need for the, some of the skills that are listed here in terms of cost analysis, should cost modeling, et cetera. And the relationship skills, not only with our tier one, but further down and having that multi-tier, visibility, but the multi-tier relationships within our supply chains itself. Volatility is going to stay. We understand that. I think most organizations agree with that. But what that tells us as an organization is that we have to build agility into the operating models that we have. There are things, and we don't necessarily control that environment around us. The only thing that we can do is to be able to react quickly to whatever does happen. And that is the agility that we need. And lastly, one of the enablers that's going to help with all of this is the technology. And again, as I mentioned earlier, there's a lot of hype around generative AI, intelligent automation, a lot of incubation opportunities out there to consider and look at these types of things, and it's happening as we speak. There's a lot of opportunity to consider these, and how will we blend the technology and human? I like to say it's enabling us in our human capabilities, but it will have an impact on some of the work that we're going through. So with that, I would just say, the future is quite bright, but it's going to be different than where we are today. Graham?
Excellent. Well, what a great way to end. Chris, Nick, we're out of time, so I think we should end on that high. Really appreciate the contributions. Really appreciate this combined Hackett Group and CASME webinar. We will share the recording and the slides. But until next time, thank you all for joining us today. So thank you very much, and have a great rest of the day.